Hello, hello, everyone. Richard and Mary Moitho here from Investor Next Door Club. Thank you for hopping on tonight for our masterclass. We're going to be talking about investor mindset. Those of you that are new to us, we are happy to have you on. Those of you that are our club members, welcome. We look forward to having an exciting time with you during this masterclass.
One of the things when we first started looking at actually creating Investor Next Door Club, one of the main components about our community was really helping train people to have an investor mindset. And if you don't already have an investor mindset, it is literally the foundation for growing wealth. There is a way that investors think, a way that they see things that is different than your everyday person. And it's not something that you're born with. It is definitely something that you can develop over time. And we're always going to be talking about an investor mindset because it's not your natural thrown way of thinking. It's not what most people have grown up with. I certainly wasn't raised thinking like an investor. Richard wasn't raised thinking like that. We have lots of friends that are investors, and they weren't raised that way either. It's something that we had to develop over time. Now, I do have a few friends that grew up in some pretty wealthy families, and they grew up having these types of conversations around the kitchen table. And that is not the norm for most everyday people, but we want to start breaking through that paradigm and having that be a norm for most people.
Yeah, I mean, I think, a little bit about our background, but also maybe address some of the people that are watching. I mean, maybe it's for most people, the reason why they don't learn about investing is one, it's not taught in school. It's not taught in high school. It's not taught in college. And, a lot of people, they go get a job and they start putting money in the 401k and someone else kind of decides where that money's going. You're investing in the market, but someone else is doing it for you, right? You're just working the job and, taking the tax deduction and taking the growth. And outside of that, it's a very foreign concept for a lot of people. Now, I grew up as an entrepreneur. I grew up in an entrepreneur family. Our form of investing was investing in the business, and that's fine when the business is doing great. It's not great when you have downtimes and you don't have another stream of income. So that's one of those things where it kind of, you got to start looking at money differently. That money has a job. It's supposed to be doing work while you sleep, right? Or while you're working on something else. And I think for a lot of people, when they think about investing, it's confusing. Like, what do I invest in? And we were in the mortgage industry, which taught us nothing about investing. It wasn't until I got exposed to private lending, which was done outside of banks. It was done with individuals or small companies that were doing private financing. And that's when I started to learn about investing. That's why I started learning about, how do you underwrite an asset and things like that, which led to two real estate funds. So kind of fast forward going forward here, when we started talking with people about, investing, for most people, it's just such a foreign language to them, right? You drop you into Japan, drop you into China, wherever, and you're going to be like, I don't know what they're saying. And that happens for most people. What we're trying to do here at Investor Next Door Club is break that down into bite-sized chunks so it doesn't intimidate you, because I think there's a whole marketplace out there that actually wants you to think that you're not capable. You're not responsible enough. You're not capable. You can't learn this. You need MBA, you need whatever. And it's just not true. You do need some learning. You need some awareness. You need some knowledge. And the other main reason why Investor Next Door Club was created was because most people aren't ready to be investors. So where do you go if you want to get prepared? See, we have a training ground for people to get prepared. And then we have a platform for people that want to grow and scale. So everyone's in multiple different camps. And I wanted to make sure that there was a place that if you were brand new to the workforce, you're 18 years old, or you're pivoting as an executive or someone who's worked corporate America for 35 years, there was a place for you to start. It didn't matter. Everyone's equal when they enter here.
One of the things that we say inside of our community is that money and finances is really a game. And in that side of that game, you can learn strategies that will help you win the game of money. And when you are playing a game, there are two types of people. There are the people who play for fun, which usually that's me. And then there are the people who play to win. And sometimes, depending on the game, that is also me. But one of the things that you've got to get yourself in a place of is to have the mentality that you're playing to win, that you're here to learn the game of money. You're here to learn the rules and the strategies so that you and your family and your future grandchildren and great grandchildren can win this game of money so that you don't have to be on the outside. Now you can be on the inside. And so there is a way that you've got to start thinking and relating to investing that you can do it. I feel like when we're dealing with people, when we talk to people about investing, there are so many people that disqualify themselves right away because they don't think they can, they don't think they have the resources, they think of all the reasons why they can't, rather than coming from a place of, I can do this, I can learn this, I can become an investor. And it is literally a shift that some people need to do just one time. Like they just get it, they like see the difference. And then for some people, it's something you're going to have to fight for constantly, consistently until it becomes a habit. It's kind of like riding a bike. For some of you, you get balanced right away. It's like getting that investor mindset. For most people, though, it takes trial and error and practice and getting around the right environments of people who have that investor mindset to start training yourself that you can do it and start relating to yourself like you can become an investor until you are an investor. So we're going to talk a lot about that tonight, and I want you to kind of assess where you are in relationship to becoming an investor. Are you someone who this is just a really good idea, or are you someone that, hey, I want to master this. I want to win this game. I want to become an investor and have enough income producing assets that fund my lifestyle so that I can really get free. And you, in order to really become an investor and have that mindset, you have to decide that you are gonna have it. Like that there is not a possible way for you to fail at this.
So when you think about, investor mindset, I mean, it really is creating awareness, but also having a fundamental understanding about some things. So investor mindset is not about how you think, not how much money you have. And think about this when someone's either going to start running or they want to, get in shape or whatever it might be. There is a beginning period where you're doing a lot less than what you want to be able to do. One, you got to build the muscle. And that's really the thing around with investing. And we talk a lot about personal finance. We talk a lot about real estate investing because those are two things that people are inundated with all the time. We're not getting into trading in the stock market and this, that, and the other. We're focused on things where people can have control of their assets and that they have something that they can pass on while creating cash flow and a whole host of other things. So really, there's a difference between spectators and investors. Spectators react to markets. Investors read them. They look at the data. They look at the information. They're not emotionally involved in it. They're just looking at what's happening. And then also, spectators, they chase headlines. Instead of investors, they chase fundamentals. They do things that are consistent. It's relatively boring in a lot of ways. Yeah, there's things that we do that are exciting, especially when you come across a really fun, sweet, deal that doesn't come around all that often, but we're not chasing trends. And then the other thing is, spectators, focus on hope. Hope and prayer is not a plan, right? I do believe in prayer, but you got to have some knowledge, you got to have some skills to back it up because investors are going to plan, they're going to position, and they're going to participate at the level that they can participate in. And we're going to talk about several other things that come into play when it comes into that mindset.
You have to have some long-term thinking if you're going to become an investor. It's kind of like a gardener, you have to think like a gardener. Those of you who garden, you're going to appreciate this. You can't shortcut planting season. When you plant a seed, you can't make it grow faster. You can make it, there are some things you can do to help change the outcome and the health, and you might be able to help it grow a little bit faster, but you're not going to sprout a tree in 30 days. It's just not going to happen. So you have to be willing to play the long game. You have to make your decisions based on long-term goals and zoom out rather than zoom in. As human beings, we overestimate what we can do in a day. How many of you today, it's Monday, how many of you had this huge long to-do list and you got like a fraction of it done? That's what I'm pointing to. But how many of you realize that if you focus on what you could do over the next year or 5 years, we really underestimate that because there's a compounding effect of what happens. If you just put away maybe, $10 a week instead of not doing that. I mean, $10 a week, it's not a whole lot of money, but that's $500 more that you have a year compounding over 5, 10, 15 years invested in something that could be pretty substantial when you don't even think $10 a week is anything at all. That's what I'm talking about, is something compounded over time makes a huge difference. Patience is really your edge, and you've got to be patient in the market, because what happens in investing is a lot of people, when they don't have an investor mindset, they look at the little ups and downs and they freak. And when they look at the down, they don't zoom out to realize that there may be up and downs, but over time, it's always an upward trend. So you've got to be willing to wait out the market over time. And as you start to have more time under your belt, decisions actually start getting easier, because you start participating and noticing those trends. You start to realize that long-term goals is really where you're going to have the success you really want to have.
The other thing is protecting your seed. And this is a big one because it doesn't matter what financial bracket you're in, what tax bracket you're in. It doesn't matter how much you make, how much you don't make. You got to eliminate bad debt. Bad debt is that double digit credit card debt that's high that you can't outrun the market on. There might be some other bad debt that needs to be, reeled in, or structured differently, but you got to think about it. Bad debt chews up. It's become a line item in America, which is why we talk a lot about personal finance and ways to control it or eliminate it in a short amount of time, because banks are perfectly happy with you being on the 30-year plus plan, paying the minimum payment. And then the other is living below your means. There's a period of time where you like, listen, this season, we're cutting way back on all this stuff. We're going to say no to a lot of stuff. And because it's not consistent with our goals. It's not about living small just so you're like living like a pauper, right? It's just you have goals, and every time you spend against or spend inconsistently against those goals, then it's just going to push the goal out. So I was listening to someone on a podcast, and the lady made $60,000 a year, and she said she can't buy a house. And then they went through her finances, and she's got 25% where she's spending on eating out. And he says, listen, you're basically eating your future house. I don't know when you're going to get a house. You're spending a lot of money on eating out. And she's like, I can't eat out. And it's like, no, you can eat out as long as you're okay with not having a house. But you can also meal prep. You can do a lot of things because you could, spend a lot less money at the grocery store. So it's like it's picking those seasons where you're going to get yourself prepared. You're going to get yourself in shape. And listen, if you're doing well, everyone's got fat to cut. And in this season, in this economy, there's a lot of unpredictableness. I think everyone should just tighten up and plan for the future, start investing for the future. There's a lot of people that are sticking their heads in the sand. That's a bad play, because if you have cash sitting on the sidelines in a bank account that's earning maybe two and a half, three, maybe you got in a high yield money market account, it's getting five something. That's fine, but that's not even keeping up with inflation in most cases. So money sitting idle depreciates, and it has less buying power in the future. So you've got to start thinking about, how am I getting rid of this bad debt? How can we live below our means so we can get rid of this bad debt? Or how can we live below our means more and invest more for the future? So you're building that buffer no matter what. It doesn't matter what season you're in.
Now, as an investor, you've got to have a commitment to learning. It is a growth process that doesn't happen overnight. It happens over time. And knowledge is the only leverage that no one can take from you. So no matter what happens, always have your own knowledge. I love reading biographies of successful business people, because time and time again, almost every successful person has a completely broke bankruptcy story. Like, they all do. And they all say, I knew that if I had to start all over again, I could build it faster because of the knowledge they have. So you've got to pay tuition to the market. You pay now and play later, or play now and pay later. So you've got to find people, communities, seminars, courses that you can dive into, that you can invest in to really grow yourself in your knowledge base. And you've got to really study one asset class deeply. You've got to study one strategy. If you only had $10,000, but you have incredible depth and knowledge in one category, it would be better than having $100,000 with very, very shallow knowledge over a variety of different types of investments. So you really want to be knowledgeable in the things that you want to invest in, and you want to surround yourself with great operators. You want to be around people who are actually doing it, because more is caught than is taught. There may be one thing that you've learned and you've heard multiple times, but because you're around a different group of people, they've said something very similar about the exact same topic, but said slightly in a different way that had it click for you. Richard just talked about, protecting your seed and where money comes from. In previous master classes about personal finance, we talked about investing is the margin between what you make and what you spend. That's margin. Margin is investment money. That's also seed. So you may hear it in multiple different ways, but being around a financial community is what's going to save you. Because when you're around a financial community, that collective community has way more experience than you're ever going to have, it's going to prevent you from making some really, really costly financial decisions. When you're around people who are smarter than you, who have been there, who have done things you haven't done, you start making better and smarter money decisions.
Now, when it comes to calculating risk, that tolerance, again, that's where that muscle comes into play, because investors don't avoid risk, they manage it. They look at the information and they make their best decision based on that information. They get it usually from multiple sources. And so don't think of risk as the enemy. If you can think about risk and resistance is the only way we grow anything. You're gonna risk some capital to grow it. You're gonna endure some resistance to get stronger, faster, or whatever it might be. So you want to make sure that your relationship to risk is going to have to shift over time. But again, for everyone, sometimes it starts off as very small steps, as taking that risk. And the size of the bet, right? You never put so much into one single deal that if it fails, it wipes you out, right? That's why we talk a lot about avoiding scams, because there's a lot of people I've seen over the years, well, they'll put something, a lot of money into something that was not vetted, and it ended up being a bad compliant deal, right? It was just bad. It was illegal or it was bad, one of the two. And it ruins years of building up to that amount. So it's important that you look at diversification, which we'll talk about a little bit as well. And then you always underwrite the downside. Like, what's the worst case scenario? The worst case scenario should be zero. It should never be negative, right? But you got to pick better deals than just things that are going to go down to zero, right? There's always risk. So it's like, okay, if this doesn't perform as well, if this does flatline, whatever it is, am I okay with that? Now, for most people, when they have the mindset right, it's not the only thing that they're investing in, right? They've got their stuff spread out, and everyone is going to do that to a greater or lesser degree, depending on how much depth they have in a certain subject matter. So just understand that risk is a muscle. It needs to be developed and built over time, but it also comes with knowledge and experience. And the more you have, then the more risk you'll take. What in the future, you'll do things that people would say, oh my gosh, that's crazy risky. But for you, it's absolutely not. I have gambled and bet a lot on certain ideas and projects. And each time I'm stretching further and further. So I couldn't do that 15 years ago. But today I can do it a lot more easily. It doesn't mean it doesn't make the hairs on my neck stand sometimes, but it's just I have a lot more confidence based upon my experience. And I also have a lot more confidence in how do I make that work if it does start to shift in the wrong direction. There's solutions that are built into place.
As an investor, you've got to train your eye to recognize opportunities. So investors, the market always is going to turn like that. We always have, it's cyclical. The market is up and the market is down. I mean, if you've lived any amount of time on this earth, you know that there's going to be up markets, there are going to be down markets. And when most everyday people, where they see problems, investors see opportunity. And so one of the things that you'll start to learn to develop is to recognize the season that we're in. There's spring season and summer season and fall season and winter season. And winter season, most people panic
Mm.
Investors prepare for winter because winter is where money is made. They're ready with capital, ready to deploy so that they can take advantage of downturn markets. It is what you have to train your eye to see, and that doesn't happen automatically. This is where a great financial community can help you to train your eye to see opportunity, because you're not even going to know what to look for. You don't even know what to study. But when you're around people who are having that conversation, you can start to catch on to what it is they're seeing. One of the things that we always urge in our communities, when we get together, we always have social events. We always have times of fellowship. We always have times where we're just connecting and sharing a meal together, because there's always conversations around that table about opportunity. And if you're new, what's great for you is you get to listen. You get to be inside the huddle. You get to hear what people are discerning as a good opportunity and not a good opportunity. And people are talking, and that's where you start to learn how to look for opportunities, what questions to ask, because you're going to get around experienced operators. That's where you're going to be able to train your eye, because you're not going to come across every opportunity, especially if you're new to investing. You're not going to see that. And by the time you have an opportunity ahead of you, you've got to be able to act quickly, not just wait. It's not enough just to recognize an opportunity. You've got to be able to recognize an opportunity and act on it while it's hot. And that's something that can be developed over time, but a financial community with people who are talking about that will make it dramatically faster for you to train yourself to do that.
And when it comes to having systems thinking, you got to build the machine, not just don't just work the job, so to speak. So I heard someone talk about, it's like, listen, you've got a way to make income, but do you have a way to make wealth? And again, that's consistent, patient effort over time. So when you trade time for systems, right, the job earns dollars, right? The system earns you dollars while you sleep. Those are the two things that you got to be thinking about. So the goal is to own more systems each year. Now you could own fractions of an asset, which pays you cash flow, which increases, your net worth over time as well, because cash flowing assets compound, right? Income producing investments like real estate businesses, dividend type portfolios, they create the loop that funds the next investment. So it's never just about, hey, I'm going to get this cash flow, increase my lifestyle. It's like, I'm going to increase my cash flow so I can increase my net worth again more over time, because now I've got this additional stream of income coming in. And I think a lot of times what people do is when they start getting that extra money in that they didn't have before, they start forgetting the fundamentals of what actually got them there. And that's where you've got to have some really good systems and some checks and balances in place, because rich people build, the rest rent. I'm not opposing saying that you should never rent. I'm just saying that, you got to be thinking about owning the asset that's going to bring the income in. So you want, obviously, when you're looking at commercial property, for example, or being, a fractional owner in a commercial property, it's because that property is going to have tenants, and and those tenants are going to be paying rent, and that's going to produce cash flow for the owners, the fractional owners of that property. So that creates that whole cycle where you get to start to participate at a level that you can start, versus waiting until 10, 15, 20 years down the road when you can start, doing something at a level that you think you're supposed to be. You can start a lot smaller than you think. And that's the part that we really try to hone in for people, is that we want them to know that there is a place to start. It's not as far out as you think. It's a lot closer than what you think.
We've got this whole in cash flow system when people join our community to help them create a system that does generate cash flow for them. So real quickly, I'm going to go through it. But when you join our community, our Inc. Lifestyle or Investor Next Door Club, you're going to access these incredible strategies. So in our community, in our academy, we teach about tax strategies, financial strategies, investing strategies. We talk about different finance strategies. And so when you learn these things, you're going to get excited. You're going to save tons of money. You're going to find money that you didn't know was just bleeding out in your budget. And you're going to start sharing about our community. You're going to talk to your friends, your family, your neighbors. things that come up in conversation. And when those people join our community, we're going to revenue share with you, and that's going to make you some money. And when you're doing that over and over again, what's going to happen for a lot of people is they're going to get out of debt. They're going to generate more margin, and that's going to put them in a position to actually start investing. So now you're in a place where you can start to buy assets, which is at the top right of the infinity symbol. And you can buy assets with us in one of our investment communities and have fractional ownership, or you can buy assets on your own based on the information that you've learned in our community. But buying assets creates cash flow. And that's the whole point of this, is to have enough income producing assets that creates enough cash flow that funds your lifestyle. And when you get this machine going, when you get this system going, then when things happen like a medical emergency or you lose your job, it's not a complete disaster. It is just an inconvenience. And that's what we want for our people, is to have a cash flow system that you don't have to be tied to a job. You don't have to be worried about the economy. Your cash flow system, you've created your own economy.
Now, emotional discipline's really key here because the market pays a premium to those who stay calm. Most people are very reactive. So when it looks like things like this, when you've got fear and greed, they're expensive. And that's where a lot of mistakes get made. And then the other thing is, write the rules first. This is what I was talking about, is you want to have what you're comfortable with doing. As you start growing your risk tolerance, your rules are going to change a little bit, and your criteria of what you're willing to participate in or at what level, all of that really does matter. And for I'll tell you this, boring does beat brilliant. There's a lot of people that chase a lot of trendy stuff. That's fine. It may work for 6 months, might work for 2 years, but do you want to kind of be on that hamster wheel? Do you want that kind of stress? Because consistent investors, who show up every month, they outperform brilliant investors. They're not just chasing the next high. And, especially if you're investing part-time because you have a business or you have a job, you need your focus on that most of the time. So you need to have something that's like, hey, I'm doing this, but then I take my margin and I put it over here and I let that do its thing so I can focus on this. But a lot of people will chase, the trendy thing, or, hey, I heard the Uber driver talking about this, or my neighbor's talking about this. That's all fine and dandy. But if you've got a plan and you've got a system that you can follow, then you can have emotional discipline and only focus on the things that work for you and your goals or your family's goals.
You got to have an ownership mentality. No one's coming to rescue your finances. That's the good news, which means you've got to take the wheel. You've got to be the one in charge, and you cannot blame anything outside of you, because that's a broke habit. Investors don't blame the economy. They don't blame the market. They don't blame the employee. They don't blame AI. They see all that happening and they see opportunity. They start to see, how can I leverage that? How can I turn what's happening that's negative into a positive for me and my family? How can I get out in front of that? And your future self is counting on you for today's decisions. You have to know that who you are 5 years, 10 years, 30 years down the road is going to hope that the you of today makes the right decisions so that the you of your future is set up well. And one of the ways that we do that is in our community, we set you up with these incredible tools and calculators and templates to help you take control of your finances. So we partner with a company called Pocket Nest, and they use some really incredible technology to help you manage your finances today and help you to make those smart decisions and take all the guesswork out of planning for your future.
The other thing that's really key is understanding is, like, for example, the Pocket Nest tool. Most of our members will find a way to save an extra two, three, four, five, $6,000 a year, usually within the first 30 days, just by implementing what's there. And I just want you to know that our members, they use that tool. It's 100% confidential, and none of that data is ever sold off. So it is completely between you and the tool, no one else. When it comes to relationship capital, your net worth flows through your network. The things that we're able to do today is because of the years that we've invested in relationships and the things that we've done, even in some cases without any form of compensation, but it was just building that relationship, being of service, being a resource. And that opens up doors that were not possible. A lot of times people come in to something and they're immediately with their hands out looking, what can they get? I go into a situation and I'm looking at what can I give? What can I provide? What solution? What experience can I share? And a lot of times, like I said, that is done without any expectation of anything. Now, sometimes there's a partnership there, but a lot of times it's just there just to be helpful because this information's been learned over decades. But sometimes, the thing that somebody needs is just a strategy or just a thought or a new idea or a new perspective of looking at something. And that's what happens inside of our community also is a lot is caught versus what is taught. And that's why the ones that are connected really end up being able to produce results a lot faster than they ever thought they could possible because the deals they flow through trust. I focus on giving before I get. And then over time, what happens is the community becomes this living, breathing organism and it just compounds over time and it makes things happen quicker because there's a speed of trust there that wasn't there 6 months ago, 2 years ago, 5 years ago, and things just happen a whole lot quicker.
So you've got to have a reinvestment habit. And, Richard talked about this earlier is don't eat your seed. Like
Mhm.
you can't eat the harvest that happens. We spent 20 years in the direct sales industry. We helped people make more money than they've ever made before. But what we saw over and over again that was probably one of the catalysts to us starting Investor Next Door Club is we watched so many people eat their harvest. They had no idea that the harvest and the excess that they were generating really is the seed that they need to invest to create more harvest in the future. And people just didn't get that. We saw people making all this money and just burn through it. And then the company goes under or something happens and they have nothing to show for it. People who have made more money in 5 years than they made in their previous 20 years, and poof, just like that, it's gone. Well, you don't want to be that person. You want to automate the discipline. When you create that margin, when you download things like Pocket Nest and you find that extra $6,000 a year, you don't just burn through that $6,000 and think, oh, I have money now, I can buy a new car. No, that's seed, that's harvest, that's something that you can use to invest and start to automate whatever you save. You automate that and put it into your investment account, and that's where compounding lives. Einstein called that the eighth wonder of the world, compounding interest. And it only works for those that keep reinvesting long enough to feel it. If you invest just a couple $100s, you're not going to feel that much. But if you invest a couple $100 and keep adding a couple $100 more every single month and a couple $100 more every single month, that starts to compound over time, and it compounds very quickly. And there will be a moment, a tipping point, where that starts to snowball in a really great way. The first few years, it doesn't feel like a whole lot, but there was a moment that it starts to really, really compound. And that's where you've got to zoom out. That's where you got to play the long game. That's where all these things about having an investor mindset start to culminate together.
And the other is having a growth identity. You got to stop saying you're not good with money. Maybe you don't say that, but a lot of people do. Start saying I'm becoming. And no one's, for the most part, born good with money. Maybe they got taught, maybe they read something early on. Who knows? But most people are not because they start off usually in some kind of survival mode and they're chasing. They're chasing money, they're chasing their bills. So you got to start catching your language that you're saying because identity is going to drive that behavior, right? You're always going to act in alignment with who you believe you are. So you need to start shifting what you're saying about money, even saying, well, the economy's bad. Listen, I might say it in a descriptive manner that the economy has shifted, but I'm not saying that the economy's bad, therefore it's hard for me to win. I'm just identifying that, yeah, things have gone up in value, but that doesn't mean I can't go find opportunity. So for me, it's not the same kind of weight as it is for somebody else. And then, you go from I can't to I'm learning. Everyone starts off learning in that beginning stage. If I've been in martial arts for decades, it doesn't matter if you walk in as a 5-year-old or a 50-year-old, You're starting off as a white belt. Your age does not give you seniority to wear a different belt. So the same thing here is maybe you've like listen for years you've been wanting to get better at money or whatever it is, and you feel like you should be further along. Everyone probably feels some form of that, but everyone starts off on the first step of learning. What and your learning step is going to be different than someone else's learning step. So just know that you're going to want to be a student your entire life. I dropped out of high school, but I have been a student since the day that I dropped out of high school. Because I had to, but also I enjoy it too. And so for you, just know that wherever you're starting from, it's completely fine because no one was taught this and you weren't given the roadmap or the strategies that you were supposed to, or any of us were to, right? And then start looking at, you are becoming an investor. Now, that doesn't mean you're investing today or tomorrow, maybe in most cases, but what it does mean is that your decisions you're going to make is what's going to allow that to start happening. Whether it is you start shaving off some of the living expenses, you start paying down your credit card debt faster, because that's getting you closer to becoming an investor than someone else who's not doing that. And there will be a moment in time that you get to do the things that others will not get to do because they didn't practice what you started practicing 6 or 12 months prior.
This is a really, really long sentence. Probably if you're an English major, you're cringing, but it encapsulates everything that we shared tonight. So take a picture of this, okay? Wealth is what happens when a long-term thinker, protecting their seed, committed to learning, takes calculated risks on real opportunities. They build systems, stays disciplined, owns the outcome, invests through relationships, reinvests relentlessly, and refuses to stop becoming. So this isn't something that you learn and become overnight. It is something you develop over time, and getting in the right community around the right people will help accelerate this faster. And this is the reason why we created Investor Next Door Club.
Here we have an on-demand academy. There's an interactive community. We have investment clubs where we crowdfund together. And then there's the part where people get to refer people to the community and also help create an additional stream of income, which ultimately what it does is it advances their financial goals, because most people are, how do I get more margin? And so that's what that additional stream of income will do. But we created this because we wanted everyone to know they had a place to start no matter where they were, no matter what struggles they've been in, whether they're on the downside or they're on the uptick, it doesn't matter. So many programs out there are very, very high ticket programs, and they're focused on, getting a small number of people in. We wanted to do something that served the masses. And so we did it on a subscription basis. And I would encourage you that if you're just taking a look at this for the first time, the person that invited you to this, or however you stumbled across the masterclass, is get back with the person that invited you and ask them to learn a little bit more about Investor Next Door Club, because we did this to serve a broad audience, to make sure that people had a place to start and a real pathway, a real on-ramp, because for most, it doesn't exist. And what we want people to stop doing is saying someday, because we believe someday is today, and it can start today for you or for someone else that you know in the near future.
We are here, and everyone's invited to join our community. Y'all have a great night.